Hey, what's going on, guys? Corey Smith here, CoreFX, coming back with you for this pre-week market analysis that we do here, covering the fundamental and technical analysis in the Forex markets. We've been doing this every Sunday now to get the week started and get a look at the week prior as well as the week ahead. I cover fundamentals, technical news events, and my outlook on what to expect coming forward here. Like I said before, if you like technical analysis only, and you don't care about the news and learning about all the fundamental analysis stuff, you can skip to the end of the video and just check my technical charting and watch the indices that I cover for each individual pair to get an idea where the individual currencies will be going. But I highly recommend everybody at least pay somewhat attention to the fundamentals to at least know what to trade or not trade at given times. So I'm going to go ahead and get started here with the prior week in the performance. I'm doing this video after 5 p.m. on Sunday, so it already re-updated the relative performances here. So you can see this is just the opening day here, Sunday. But last week we had the strongest three performing pairs were going to be New Zealand, the Euro, and the dollar. And then the weakest performing pairs were going to be the CAD, Swiss franc, and Japanese yen. CAD had the biggest move of the week. It was weak 1.07%, so not too big of a move last week. CAD, yen, and Swiss franc all basically had about a 1% drop in value, where the New Zealand dollar, being the strongest pair, had only a 0.60 percentage increase in value. So not too crazy of a move, but those were the strongest and weakest performing pairs last week. Breaking down our analysis, we go to the futures charts here for the US dollar, and as you can see, we ended up slightly on the week. Here's where we opened, here's where we closed. Ended up slightly on the week higher. And switching over to the technical chart now with the dollar, the Dixie index we have here, you can see we are now in a bearish pennant down here as we're continuing to form this basing pattern. Okay, now from a technical standpoint, you'd be expecting a break lower here and then a push lower to at least retest this lower low here. There's a strong support, as you can see here, on around 91.75, but if it can break below this 91 level here, we got some room down to the downside. If you look left here, you can see price hasn't been here in a long time, and there's pretty good straight shot down lower once this level is broken. So we could see 90 level being tested, or on the other hand, you could see this break up higher and come back up to retest the weekly level here at 93. But that'll cover the US dollar. We got to wait for some confirmation, but a break and close below this trend line and even below this support here could be a good sign that the dollar is going to roll over again. Moving on from the dollar, we'll cover the euro. And the euro on the week was basically flat, as you can see where it opened as opposed to where it closed, right around the $1.20 area. Pretty much still making its completely inverse moves as the US dollar. Now if we switch over to the euro's chart, you can see here we have a bull pennant, and we have price consolidating and squeezing closer here above this strong weekly level around 114.50 that we broke out of a couple weeks ago. And now the same thing, we could be expecting this to either break higher or roll over and break lower. Oh, sorry, here's something I forgot to cover on the US dollar. Breaking it down to a lower time frame here. Here's something I'm seeing that could kind of cause a little bit of a less anticipation of a bearish break lower. As you can see, that strong resistance has held for an inverse head and shoulders to be formed here, right? So the neckline would be around here. So this would be around, the neckline will be right around this trend line. So if price is able to break out of this, we could see a possible test of this zone and then a breakout completing the formation of the head and shoulders. So we'll wait to see what happens there. But if you switch the euro down to a lower time frame as well, on the 4-hour, you can also see a head and shoulders slash triple top formation forming here. So if we see price break lower below this 50 SMA and trend line, as well as this weekly support here, we could see a reversal of the strong euro that we've been seeing all year. Alright, moving into the yen. As we saw, the yen on the week was one of the worst performers. You can see it opened here, closed down here. Not too big of a loss, but still one of the weaker performers this week. Switching to the technical chart, you can see here we are officially now in a full-fledged downtrend in the yen. 20 SMAs steeply dropping, 50 SMA is still slightly pointed upward, but it's about to have a crossover, and price is now broken below the 200 SMA. So we could expect a little bit of a rally here, maybe retest this zone, but all in all, the yen looks like it is in a clear downtrend now. It's coming up to this major trend line that we're hitting, as you can see here from a weekly point of view. But all in all, we are still in a downtrend. This trend line right here could be something to watch as well. But that being said, the downtrend, we're at least expecting to come back and retest this line here to see where prices go from here. The yen has a lot to do with what's going on geopolitically in the global economic climate, so we'll see if anything's going on with North Korea, stuff like that. It's really, really key to keep an eye on with the Japanese yen. And since it's broken close below the support, we are now looking bearish for the Japanese yen, and we could expect another leg lower. All right, switching over to the pound. This was another underperforming pair this week, but as you can see, basically did nothing, just chopping sideways, still up in this high and tight base. As you can see here on the daily, we had that break above this weekly zone, and now price has just been chopping in a high and tight base above here. We could see price break out higher and push another leg higher, and potentially even get back to prior Brexit levels up above this 135 zone for the pound. So this is something to really keep an eye on. It's pretty extended, as you can see how far price is from the moving averages, so we could see some more consolidation or even some correction prior to going higher, but all in all, we are looking north with the pound as well. Moving on from the pound, we will cover the CAD. Last week with the CAD, we had overall bearish performance. As we said, it was the weakest pair of the week. It's been lower. It made 3 moves lower this week, as you can see here, with some correction and consolidation in between. Normal market structure here. And it is now at, on the technical chart, retraced level. As you see here, if we pull out our fib from this strong move higher, we've now hit the 382 Fibonacci level, which also has some wicks to both sides here, acted as resistance here. Big candle broke through, now has acted as support, so we could see this bounce off of here and possibly come up back up to the 81.50 level here in the weeks ahead, as the CAD is now tightening monetary policy, and another good currency to be looking long in the future here. Moving on to the franc, we've got opened on the week here, closed on the week lower. Again, one of the worst performing currencies of the week. It broke lower and back down now. Switching to the chart, see how we've been in this nasty chop I've been talking to you guys about, shooting up to the high, shooting back down to the bottom. We are now at this critical level down here. As you can see, it's a very strong support resistance zone, and as far back as really you can see on this chart, you can see it. This is a very critical level. SMAs now are about to cross. We are down below here. If we break lower here, we could see an extension, and a clear downtrend could be made with this currency, as we haven't seen any clear trend in a while. This could potentially signal it right here, a break lower this week, or we could consolidate and next week make the break lower coming weeks ahead. Or it could bounce and continue to stay in the range and head back to the highs. Aussie, as you can see, had a pretty choppy week, shot up and then shot down, ended the week slightly lower, relatively flat. Switching over to the chart, you can see we are still in this uptrend, testing this, bounced off this trend line here. We see the week it's opened a little bit higher so far here on Sunday, double topped off this weekly support, closed down lower here. And we could see a new higher high made this week if we can bounce up here and continue higher, or we could stay in this choppy little range up top here in the bull market. But all in all, still got 20 above the 50 SMA, above the 200 SMA. SMAs are sloping upwards. Price right now is below the 20, but it's above the 50, so bullish. We're still bullish on this pair as it's still in a strong uptrend. And then finally, we cover the New Zealand dollar. On the hourly time frame here, you can see we opened there, closed here, pretty flat on the week. Again, volatility. This looks very similar to the Aussie, as they are really highly correlated. It ended the week higher, but all in all, not too much of a move again. And if we switch this to the daily chart, we can get a better view here that price was right under this when it loads here, come on, right under this resistance we've been talking about, right at around 73.50 or so. This week it managed to shoot up above it, but came back down and closed below this level, reversed back under it, and we're now testing this resistance again. So we could see the New Zealand dollar now continue higher as we're making a series of higher highs and higher lows through here. We could see some strength return back to the New Zealand dollar, and maybe an uptrend be coming here out of this. All right, news. As far as last week goes, I'll just run through quickly what we had last week. Starting on Monday, there was nothing Sunday. Starting on Monday, we had the Governor Carney spoke, but that wasn't really a big deal. It was just at a convention monetary fund. But we had the meeting minutes out of Australia. Sorry, 1 second here. The CPI here we had first, final CPI out of Europe, which was as expected. No big deal there. Huge overestimated here. Beat expectations with the foreign security purchases. This is basically the Canadian bank and their purchasing of foreign countries' securities. That was much higher than anticipated, which could show some outside investment out of the Canadian economy. And as you see here, then we moved into the Australian dollar's monetary policy meeting minutes. This, like I covered, is released 2 weeks after their rate statement. Forecast remains pretty much the same. They're seeing the strong global economics going on, the strong economies around the world, strength out of China and their infrastructure and manufacturing, strength out of Europe, big time, pound, Canada, Australia, U.S., pretty much strength globally. They see it. And they're anticipating further Aussie appreciation, even though it's pretty highly valued right now. They're basically just defaulting that to the weak dollar across the board. It's a very commodity influential market, and the dollar is the basis of commodity markets, the currency used to trade. So it's really affected by the weak dollar has gained some strength big time with the Aussie, but their cycle is planning on ending end of this year, and they're anticipating the Aussie to weaken to not get that appreciation too out of control. And then we move into Tuesday. As we said, there wasn't too much going on Tuesday, but we did have the building permits out of the U.S. Good gauge for the construction industry, leading indicator, so it shows what's to come. And we beat expectations here by 0.8 million. It's a pretty good beat. 0.08 million is a pretty good beat here. It's a high volume of building permits, so this could look good for the construction industry. On top of a lot of rebuilding that'll be going on with the destruction now Irma just caused. This could really, and Harvey, this could really boost the construction industry, which is another big economic sector to watch in the economies like the U.S. Moving into Wednesday, pretty big day. We had the pound retail sales beat expectations, so we're continuing to see strong numbers out of the pound. With Brexit looming, we still have some uncertainty in the air, but as far as the economic data has been going out of the pound, we have great numbers still continuing to come out. This takes us right into the FOMC statement, FOMC meeting that we had. As we said last week, this was going to be very highly dependent on the rate statement, the prediction for 2018, 19, and now 20, as well as the unwinding of the Fed's balance sheet, which we told you was up to $4.5 trillion. This was government spending to stimulate the economy prior to the recession, kept rates very low for mortgages and all the interest rate markets. But now we're starting to see inflation rise again, economic stability, so the Fed's going to start unwinding that balance sheet. But to not spook investors and throw the market out of whack, as the central banks are there for stability and price control, they're going to unwind the balance sheet very gradually, $10 billion per month, increasing it incrementally month to month, with a max cap of $50 billion per month over the next year or so. And they are basically what they'll do is they'll let the bonds and mortgage-backed securities expire, and they did confirm our expectations with this. They'll let them mature and then not replace them. So this will create the slow release of this balance sheet, the slow unwinding of it to not spook the markets or shock the markets. They are also predicting a rate hike still in December, and 3 more rate hikes in 2018, which is a little high from most economists' expectations, as 2 is more likely there, with the slow wage growth and inflation kind of struggling still. Yellen said she saw signs of a solid economy and job market still, and they think we're going to continue to see economic growth and the need for rate hikes in the U.S. in the coming years. They predicted 2020's rate to be around 2.5 to 3%, so still predicting some hiking. And the U.S. dollar gained strength off it initially, but then sold off later in the week as the dollar continues to show weakness. But all in all, if we start seeing more and more of an expectation of a rate hike in December, this dollar could start seeing a rally again like we did around this time last year, leading into the December Fed statement. New Zealand GDP expectations were met, so there was no upside surprise. The New Zealand dollar, it seemed, had been banking that in and was a little bit appreciated leading into it. So that not surprise, that expectation being met kind of let down people that were expecting an increase, so the New Zealand dollar got weaker, but not too crazy. Bank of Japan statement, like we said, there's no real craziness going on around it. Saw some weakness in the yen following the conference, but they announced no change in their interest rate. They announced no change in their monetary policy. That's just as expected. They do think inflation should hit their 2% goal with the economic conditions without needing additional stimulus. But the newest board member they just brought in, Kadeoka, thinks that the current interest rate targets are insufficient to reach this 2% inflation target, and that he thinks there should be more adjustment to monetary policy. But we'll see. The Crowd is just saying that they're going to stick to what they've been doing, and they will adjust monetary policy accordingly to hit this 2% goal. Thursday, we just had the later discussion, Bank of Japan press conference leading after that, no big deal. And then we saw another speech that we covered from Governor Lowe here, the Reserve Bank of Australia. Nothing really going on. U.S. unemployment claims weekly readings, so not a big deal here, but this beat expectations again. Less unemployment workers. Again, this number is continuously beating this. This is great. Draghi spoke here again, another just central bank speaking. And then we had Friday. On Friday, we had European PMI numbers all across the board, like we covered. We had France and Germany, the strongest economies in Europe, in the Eurozone at least. They all beat expectations, PMI across the board. This is great for continuing appreciation of the euro, as this is showing, continued increased confidence and performance of the economy. And then we had Draghi speaking again, and CAD CPI numbers. These are inflation numbers. They missed expectations. CAD weakened slightly in response to it. Prime Minister Theresa May spoke on 9:30 again on Friday. And then we had the parliamentary elections out of New Zealand. I covered that briefly, but basically the National Party, the ruling party, has won most of the majority of the votes in the general election, so they won the most votes in the general election, but it's still unclear which party will have the majority in parliament. So a coalition's needed to be formed to determine whether the National or the Labour Party will have majority. So this will take some time. Then in the coming days and weeks, we'll see who ends up taking the majority here. Nothing too crazy going on. National Party most likely will take it, but we'll see. We'll keep you updated on this as it goes. This takes us into now this week. It is now Sunday, September 24th, and the main event today is the German elections. And as the elections have shown, Merkel is going to be winning the fourth term as chancellor, leading the exit polls. But for the first time, surprisingly happened, for the first time since World War II, a hard-right anti-immigration party has won a majority and will enter the parliament. This is the AfD party, close ties to Le Pen in France, who just lost the elections to Macron. But just a far-right movement in Europe, showing that the strength is continuing to grow with this populist movement like Donald Trump era here in the U.S. So this is something to keep an eye on, and how much pull and how much popularity this party continues to get is what will be watched in the coming future. Then tonight, early morning tomorrow, Monday, Crota is going to be speaking at a business meeting and should take questions. Whenever there's questions and answers like this from central bankers, it could cause some movement. Also Monday, we have Euro's Draghi speaking in front of the European Parliament Economic and Monetary Affairs Committee. Again, whenever central bankers speaking, this could cause some volatility, and the euro has been significantly strong, so we are now waiting to see what the Draghi will do and if he'll jawbone the euro lower or not. As far as Monday goes, that basically it. Some other, assistant governors and all speaking at these conferences, but not a big deal. The monthly consumer confidence report out of the U.S. that surveys the households is coming out on Tuesday at 10 a.m. This is something big to watch as it shows an idea of what the everyday consumer and everyday Americans thinking about the economy. This will show if the expectations are high, they'll be more likely to spend and they'll be more likely for stimulus in the economy and all. If they have low expectations, we could be expecting, they'd be saving and holding their money more and not making investments and all. So this is a good economic indicator for the future of the economy, conditions, and expectations from the consumer point of view. Um, Tuesday, we also have Yellen speaking at an annual business meeting. Volatile U.S. dollar could happen, but again, this is another central banker thing. It really depends on how much they want to talk about currencies, monetary policy, questions they get asked if it's regarding that or not. So we will see. Also have core durable goods out of the U.S. This is the amount of orders manufacturers are making month over month. So this shows a gauge of the economic condition of the manufacturing industry. Bank of Canada's governor speaks talking about Canadian economy and monetary policy. Again, we could see some moves out of the Canadian dollar surrounding this, as they will be discussing relevant stuff to the forex community. This is something where they're specifically talking about monetary policy. So this is something we definitely want to watch for sure. And then the New Zealand dollars rate statement we got here. Just like the U.S. and Australia and others, they meet 8 times per year. This is one of their 8 meetings. They'll be meeting again in November. But they've got a new acting governor, Grant Spencer, that'll be taking over as the head of the Reserve Bank for the next 6 months on Wednesday. So this could be they're just there temporarily until the new one's appointed, but he's already been very highly involved, so nothing too crazy yet. Rates are likely to remain unchanged, 1.75%. That's nothing new. The last meeting was the same. It was back in August, and the data since then has been somewhat mixed. They've had inflation predictions on track with expectations. Unemployment slightly missed. Labor market's still pretty strong in New Zealand, though. They had strong retail sales and PPI, and their GDP last week was on target. So overall, generally a little bullish, but pretty neutral here with the going into the statement. Not likely to hike rates, but we'll see what they say about the future and if they're still on track to hike rates again here in the future. Moving us into Thursday, we have the Bank of Japan's Kuroda speaking at a convention in Tokyo, followed by the Pound's Bank of England, Governor Carney speaking in London at a business conference for the BOE conference. Then out of the U.S., we have final GDP quarter over quarter. This is the third GDP number released, so it's the least volatile, as they already have the original and then the preliminary, the advanced and the preliminary, which are the two prior ones. This is basically just the final edit of it, so not too volatile. And then we have the weekly USD and employment claims, no big deal. Manufacturing PMI numbers, the Caixin reading out of China that night. If this is anything drastically off, it's 50 or so, or above 52, or even a couple above expectations or below, it could cause some volatility in the Aussie New Zealand market, as this is very highly correlated, but not too crazy to watch. Friday early AM, we have the pound current account. This is the difference between exports and imports. Again, this is a very strong thing to watch, as the pound is on everyone's radar with Brexit looming. Last week, Theresa May did announce that they'll be slowly taking the Brexit over 2 years, and they will be paying some monetary commitments to the Eurozone, even though they're going to be out of it. So, they're trying to gradually leave without causing too many ripples and all. But it's still going to be a very volatile event for them and very closely watched. And numbers like this, with how the impact is on their economy and their exports versus imports, is going to be closely followed. Moving into Canadian dollars, got their GDP month-over-month reading Friday morning as well. GDP, as we know, is the overall strongest indicator for an economy. It shows their goods and goods and services produced out of the economy, so it shows how good they and strong they are. So that is another thing to be closely watched. And then the euro and the pound both have Draghi and Carney speaking again at a Bank of England conference in London. Again, more volatility could be around this. Nothing crazy in particular discussing, but there should be some volatility around this. And then you have the government data released, manufacturing PMI. These numbers aren't as effective as the third-party reading we get here, but this is still, something to watch. All right, that pretty much covers the news for this week as far as what to watch and what to not watch. I mean, what to trade and what to not trade, and what to be in around news events, not be in. Look for trades around there. The bigger, higher volatility events are better for trading. Also better if you're in a position going into that to tighten your stops or maybe even close out if you want to keep some profits. But they can cause some strong pip moves in a short period of time, so definitely some opportunity there as far as trading the events. I'll go through the majors now with you real quick as we always do. As you can see, this euro dollar chart still in this beautiful uptrend, now still in this high base moving sideways. Um, it is very nicely basing here, consolidating. Moving averages look beautiful, all sloping upwards. Nice gap between the two as we are closing the gap now, and the SMA on the 20 is a little bit curling, but still overall bullish. But again, same story with the dollar. You can see it slightly here on the daily chart with this triple top formation. Dropping it down to the 4 hour, you can see it much better. This is a very strong triple top slash head and shoulders formation. If the euro breaks under this 1.85 level here, I'm going to be very bearish the euro. I'm going to look for a quick retest fall off. But as long as this base isn't violated and we stay in this range, I'm still going to be looking bullish for the euro dollar. This takes us on to the pound dollar, and we are in this high and tight base here still in the pound dollar as we broke up above this weekly zone. We can expect it to either remain here, let the SMAs catch up a little, mean reversion, maybe come back down and retest this broken level a little stronger and then continue higher, or we can just see a break higher out of this high and tight base, which is a very nice bullish basing pattern. Taking us to the dollar CAD, as you guys know, we had this strong break. We were basing down here, and we could have broken lower, as we were saying, and made another leg lower, but price has done the opposite and retraced up. If you take this fib level here from this last strong move, you can see price is now at a 382 retracement level, but you can also take it to a different fib level, as everyone uses these a little differently. And the last prior big move here, this would be more on a 4 hour, but you can see it here on the daily as well. We are also now at the 50% fib. So we got 382 on the longer scale, 50% on the shorter scale. All in all, this is a strong zone it's coming up to now. This is also going to be a little supply zone with this strong sell-off that we're hitting. So we could see that leg lower out of the CAD now as we have sold off and accumulated some more potential sellers now at a better price here. We will see. New Zealand dollar, US dollar broke above its resistance last week, then quickly reversed back under. And as we said, it is now back up to this resistance, could be testing it, breaking out. As you see here, we have the 20 SMA jerking quickly higher, coming back up as we are making a series of higher highs and higher lows here out of New Zealand. So we could see a potential uptrend now continuing as we get it to this resistance level. Dollar yen, this is a trade I'm in long. If you follow me on Instagram or anything, you'll know. I got in here on this retest of this zone, and I'm up decently right now as the market's opened with a stronger dollar yen today. But as you can see, we are still moving bullish as price has now come up and broken above the 200 SMA, and 50 and 20 SMAs are now crossing each other. So as you can see, this is strong bullish moves. We could expect potential chop around here before moving another leg higher, but all eyes are pointing north here for the dollar yen. Moving on here from the dollar yen, we get the Aussie dollar, which has broken below this strong support here that we've been saying as long as price stays above, it is bullish looking for us. It's broken this trend line. Strong bearish candle here last week on Thursday. Broke below and closed below this resistance. Tried to come back up, but failed to and is now rolling back over. I see a bearish movement here out of the Aussie dollar. Although it's still strongly uptrending on the daily chart and all, it's broken below the 50 SMA, and we could see retest to this and a rollover of the Aussie dollar. We potentially could even see a shoulder, head, shoulder form with a drop off potentially, but we will see. Swiss dollar. This chart has been ugly, as I've been saying, but as you can see now, this is a very strong zone that price has come back up to in this range. Really all through here, you can see every time prices come up, sellers have come in and pushed it lower. So we could see the Swiss sell off again, potentially come back to retest the bottom of the range, or it could finally break out of this range, maybe come up to here and then come down, retest it, and continue higher if we see the dollar reverse, as is possible. That pretty much covers the majors there, guys. We want to get an idea of what's going on both sides of the table, just so we can be prepared for anything that happens. Moving into the Aussie Yen. It's a chart that I like because, as you can see here, this strong up series of higher highs and higher lows. Price broke and closed above resistance last week. Came down, beautiful hammer candle, rejecting this now broken support turned resistance turned support. As you can see now, price is looking nicely to come up and retest this higher high here. Another chart that I like is the Euro Pound. As you can see, price rolled over strong, broke the 50 SMA, broke this uptrend line. 20 SMA now crossed the 50, and we are in a nice basing pattern here. A trade I took last week, if you're on my Instagram or anything, was when price broke lower here, came back up to retest this zone right in here. I put in a sell order and wrote it back down to the low here. Was waiting for another break lower, but it didn't happen. So maybe this week we'll get this price to break lower out of this low and tight base here. And then that takes us over to the other chart that I like, which is the pound franc. And again, same story. We have price coming up in a high basing pattern, breaks out, comes back down to retest. Now I'm expecting another push higher out of the pound franc here. On the daily, we have a nice high and tight pattern here. Broke a very strong level, as you can see, moving all the way back here. And now it is in the big bearish candle of the Brexit happening here. So we've got some lost ground we can cover as we can continue to see a strong pound here. That just about does it though, guys. Thanks for tuning in. If you guys want, check out my YouTube page, Corey Smith with Core FX Trading. You can search me, my Instagram, core.fx. Like these videos, subscribe to me so you're notified every time I make a new one of these. I'll be coming out with additional content as well as these weekly releases. So make sure you keep your eyes out and follow me on all forms of social media, from Facebook to Instagram to YouTube, as well as Snapchat, core.fx. Website's corefxtrading.com. If you want some training, you want to get me as your mentor and become a student of CoreFX, reach out to me on there, or my email, corey@corefxtrading.com. Thank you guys. I appreciate you tuning into the video, and I'll catch you next week.